Good morning, everybody. Hey, welcome to Thursday. It is June 9th. Yesterday was an okay day, and we'll continue to move on with that when we talk to Dave here in just a moment.
Islands Light FM. Good morning. That is Counting Crows. And we're counting your money now, all right? Yeah, time to find out what's going on to your IRA and 401k on Wall Street. Every morning, we got a partner in crime on this effort. It's Phillip Statler from Statler Financial Services downtown. Phillip, good morning. How you doing today?
Good morning, Dave. How you doing? Well, today is Thursday. One more day this week, and the weekend will be here.
Yeah, we could really use an up day because we didn't get one yesterday. The Dow was down 268 points yesterday, 0.8%. Standard & Poor's was off 44, but that was over a full percentage point. And the NASDAQ fell 0.73%, down 89. We could use an up day today, and I'm kind of seeing the beginnings of it, but not a particularly impressive one this morning. I'm not sure the employment figures are going to help all that much. Do you?
I'm not sure they're going to help much at all either, but I am seeing some give and take in the futures. I've seen a little green ink, and then I see a little red ink, and it just seems to be bouncing back. But I got to tell you, Dave, the numbers look much better than they did this morning when I looked at them at about 5 o'clock this morning.
Yeah, there has been an improvement on the futures, and that was kind of what I was alluding to. We're frittering one side or the other on the zero mark right now, which beats the crud out of what we had a little earlier this morning, is the futures are notoriously volatile. The reason I'm not sure the jobless claim figures are going to do us any good is the number of continuing claims in the unemployment picture stayed rock stable, which is actually still shows a hot employment market. Only 1.31 million people want jobs. And the figure we brought up yesterday, if every single one of them took one of the job openings that are available right now, we'd still have openings available, which says we're in too hot an employment market. Add to that the fact that we're 229,000 first-time jobless claims. That is up from last week, but still we're at an abnormally low number of jobless claims out each week and an abnormally low number of people still looking for work against a really hot job market. It's an interesting situation, isn't it?
It really is, and we continue to see companies either freezing their hiring or actually saying they're going to start laying some people off. So that job openings number, I suspect, will start to come down month over month here in the near future.
I suspect that's probably it. I mean, and it sounds hard-hearted to say it, but the economy actually needs to have the employment market cool just a little bit. Not too much. We don't want to throw them into a recession, but a little bit of a cooling on the job market will end up tamping down the inflation, not quite as much money chasing the small number of goods that are available.
Oh, that's right. That's true. That's definitely what we don't want to do it too fast, but we definitely need to slow it down a little bit. Though, according to the CFO survey, Dave, we're definitely going to be in a recession, first quarter next year.
It's really nice to know that the chief financial officers of the big companies have a clearer crystal ball than our Federal Reserve does. I wonder how sure they are. We're going to hold them to that because if it's a mild one in 2023, I won't complain too badly.
Yeah, well, exactly. Evidently, 40% of them because say that the inflation's the number one external risk they have, and that's going to hurt their financial results.
And we're kind of hearing that on the annual and the quarterly reports that are coming up too. The guidance is always talking about how cost control and input costs and transportation expenses are causing them all their problems. So, that kind of backs up the same thing we've been hearing on the quarterly reports from earnings season as well. Other thing that came out newsworthy of note is the European Central Bank. I did not hear how much, but they went to an interest rate increase. They're following the lead of our Federal Reserve. And I guess you can't go to Europe to find a cheap mortgage now either because they're raising interest rates over there as well.
I'm sure everybody's trying to catch up with us, and ours is going to go up when, I don't know, when the Fed meets sometime here in the next, is it maybe next Wednesday or the Wednesday after? I got to think that we're going to hear the same things.
Yeah, more than I remember for sure. But I think the Open Market Committee meeting this month is the 21st and 22nd. So we're kind of sitting on pins and needles, waiting to see what they're going to do. And as you and I have been saying, we kind of baked in a half a point increase just on the basis of good news, getting some certainty being good news. If they go over that because they see more aggressive moves being in order, that'll be Armageddon on the indexes for a day or two, won't it?
It is, Dave. I'm looking right now at the 10-year Treasury,
Mm-hmm.
just kind of taking a gander at it, and because I thought it was pretty high, and it is. The yield's gone to 3.062%, and I'm looking at a 12-year chart. I mean, a 12-month chart. That's the highest it's been this year.
Woo! Now, there's some influence being placed on it by the European Bank moving their interest rates up as well. I'm looking at the 30-year mark. I don't think I've seen anything in the 3.2 range in a long, long time.
Yeah, exactly. So I find that, and it's been as high. It says today's high is 3.073. So yeah, moving up.
Yeah, I'm looking at the 30-year mortgage rates right now. It's an ad, so it's obviously an incentive rate, but the 30-year fixed mortgage rate on this mortgage lender that advertises heavily is looking at 4.47% on a 30-year mortgage rate. That obviously is going to be stellar credit with a healthy amount of equity involved, because I think they're up closer to 5% now. But even so, the mortgage rates are up. I compared that to the 2.9 I refinanced on. It kind of explains why the housing market is tamping the brakes nationally a little, doesn't it?
It does. When you start looking at that, there's kind of like bonds and interest rates. Mortgages and interest rates have the same impact on real estate. There's only a certain amount that folks can write a check for every month for their monthly mortgage payment, and that's not going to vary very much. So as the interest rates go up on mortgages, the amount they can borrow becomes less, which means that's less they can pay for a home.
Yep, and with the accelerating prices on home, getting that 20% down payment gets a little harder as well. So, yeah, I keep saying it looks like we're doing fine in this marketplace here in Highlands County in Central Florida specifically. But you look at a national trend, and, there's some tea leaves to be read for our future as well here. And another topic, ExxonMobil set a new all-time high yesterday. Isn't that good to hear? What's amazing to me is I didn't realize this. They aren't part of the Dow 30 anymore, and I'd completely forgotten that they got thrown out a couple of years ago. Is that amazing or what?
Yeah. To be one of the big guys out there when it comes to that industry, and to have, to rebound the way they have with oil prices, definitely, you would have thought they would have left kind of that sector represented somewhere in the Dow, but they didn't.
Yeah, it's kind of interesting. It is, and it is a cautionary tale about following price-weighted indexes like the Dow, because sometimes the moves don't make a lot of sense. Back in 2020, they threw ExxonMobil, Raytheon, and Pfizer out of the Dow 30 Industrials. All three of those. Exxon is up, let me see here. Year-to-date return is up 70%. Raytheon is up 15.3%. And Pfizer is off by a little bit because the bloom is off the rose a little bit on the COVID vaccine, but they're off 9.5%. The three firms they replaced those three with, Honeywell is off by 6.7% this year. They also did Amgen, which is up by a bit, and they replaced another one with Salesforce. On the Dow, it's down 25% so far this year. I think they picked the leading companies a little weird at times, don't you?
Sometimes they do. You makes you wonder what they're thinking and what they're looking at, because obviously they're looking at trends, right? Then in the CRMs and the cloud-based stuff is a trend, and they're just getting beat up right now.
Absolutely. Plus, are they really the 30 signature industrial companies in the nation? That's always a good question. Just a trivia point that hit me. There's still some reports coming out this morning. Phillip, have you got some individual company news?
There's just a few that have come out. Signet Jewelers reported. Now they're, K Jewelers, Jarrett Jewelers, that's that line of jewelry stores. They had better than expected profit and revenue. They actually came out and issued some upbeat full year forecasts for the rest of this year. And they came out and expanded their share repurchase authorization by $5 million. So they're going to be pumping some money in. They're up 8.5% this morning. So a
Cool.
good move for them.
I'm really getting a picture here out of this quarter that luxury goods and elective retail are surviving quite nicely at the moment, but it's the sundry goods that are having troubles.
Yeah, and that's kind of indicated by this next one, Five Below, right? So Five Below, kind of a discount closeout store. They had a good quarter. They beat by a penny a share, came in at 59 cents. However, they missed on revenue and they cut their full year guidance. So the opposite of Signet. And so they're getting clobbered this morning. They're down 7.6%.
Now, that actually kind of surprises me a little bit, given the news we had on Kohl's blowing stuff out and just accessing stuff out, because that's the kind of thing that happens to stores like Five Below, buying surplus from other companies and selling it inexpensively. I kind of expected to hear some good news on them.
No such luck today. The last one I have for you from an earnings standpoint is NIO. NIO is a China-based, electric vehicle maker. They reported this quarter they had shrinking profit margins. They issued a downbeat outlook because of supply chains. They did have a smaller than expected quarterly loss for the quarter, and revenue did top forecast, but still looking ahead is not helping them any. They are traded on the Hong Kong exchange, which is actually live right now. So they're down 1.2% today.
Nobody in the Chinese government put out a buy order on them yet.
I guess not. And we've been talking about Target a lot lately.
Yeah.
And so they're in the news again today. They've come out and announced a 20% dividend hike. They're going to increase their dividend from 90 cents a share to $1.08 a share. And earlier, at least, that was helping Target. Now they're unchanged right now, but a little earlier it was giving them a little bit of a boost.
You put out a quarterly report that creams you for a day. About the only thing you can do is say, hey, we'll pay you more to buy our stock, right?
Exactly. Hey, whatever it takes.
Hey, I'd do it too if I were in their shoes. Up day, our down day yesterday on Wall Street. Not a pleasant one, not a disaster, but it was a down day. Phillip, 45 minutes before we open this morning. Are we seeing any green ink at this point?
No, sir. I don't see anything. The only thing I see green right now is the VIX. Yeah. So we got the Dow is heading down further. It's down a little over 1/4%. S&P 500 is down 1/3%, and the NASDAQ 100 is down 0.5%. So everything's is going to start the red day today. On the commodity side, it's not much better, Dave. I got to tell you, silver's down over 0.6%, down below 22 at 21.95 an ounce right now. Gold's getting hit down 1/3%. Crude oil's down, but it's still more than what you and I looked at yesterday. It's down about 1/3%, but it's trading right now at $121.75 a barrel.
That can stop anytime. Even if I were invested in oil futures, I wouldn't necessarily enjoy that. Overseas markets, Asia was almost universally off fractionally at the close this morning. Europe is also off as much as 1.25% in Germany. As a matter of fact, they're not happy to look at our futures midway through their trading day. Need to get my retirement together and figure out what I've got when I retire, Phillip. How do I find you to get some serious advice?
Dave, that's why we really developed our core retirement design, and we offer an opportunity for folks to sit down and really get some questions answered. To do that, give us a call at 863-382-0037, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And we'll be back here again tomorrow morning about the same time with a look at what might affect your money tomorrow on the markets. Phillip, thank you so much. I'll catch you then, all right?
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Remember, if you like what we're doing here, please like our page, share us with your friends and family. We're here as a resource for you, anything dealing with retirement. Give us a call at 863-382-0037 to schedule your core retirement design phone consultation. It's that simple, folks. See you tomorrow. Bye.